This is Alan Bush with the daily financial forecast for Thursday, June 19th. In the stock index futures, we did see good gains yesterday right after the Fed released their policy statement indicating that they apparently are in no hurry to raise interest rates. They also downgraded their estimations of the GDP for this year. So a very dovish statement supporting stock index futures yesterday afternoon with good follow-through gains today as well. We continue to believe that the main trend is higher for stock index futures. We also continue to believe that the Fed will be very slow to raise rates, maybe not even raising rates until next year. Now, over in the foreign currencies, the dollar index coming under quite a bit of pressure yesterday afternoon with the dovish Fed statement. Of course, lower interest rates, or at least no tightening, is bearish the dollar index from an interest rate differential point of view, with follow-through weakness again today. So with the Fed being dovish, that also supported virtually all of the other major foreign currencies yesterday afternoon and also this morning. We even have the euro currency higher, even though apparently the Greek IMF situation is not getting any better. Also, we had new 7-month highs in the British pound, with retail sales in the UK coming in stronger than expected. Higher energy prices supporting the Canadian dollar and the Australian dollar. And we continue to believe that the Canadian dollar is likely to be the best performer to the upside. And now over in the interest rate markets, the front end of the curve holding up very well, advancing today with the main influence being that the Fed statement yesterday. However, the 30-year bonds under a lot of pressure, which is for the most part, I would have to say, not responding well to the news. We do have the Greek IMF situation, which should be bringing some flight to quality buying coming into the long end, which is not the case today. The dovish statement should be bullish the entire curve, but is only supporting the front, not the back. So the bonds are not looking that good technically or fundamentally, and in fact, with the bonds not performing well on bullish news, that has to be viewed as somewhat of a sign of weakness there. So we continue to look for the front end to hold up, the back end of the curve price-wise to probably come under some additional pressure longer term. And once again, good trading, everyone. Also remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.